How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome to today's briefing. We're looking at the number 11 sugar contract traded in Chicago, Mercantile Exchange, and you can see that it is up very robustly. If we take it from here, say, conservatively estimated at the end of October, to its current price, we see a rise of 19+% in 100 days. It's about 3 months. And we expect more of the same. You see that it's broken above the 200-day moving average at this point in the end of November. Straight ahead, took the 50 out, took the 20 out, and is dancing well above the 20-day moving average. And that's always a sign of, let's take a look at the Keltner channel. You can see it's dancing at the outer extremes of the upper band of the Keltner channel, which is a measure of volatility adjusted price movement. We also see, curiously enough, that the large speculators are net short. So they're caught out here, and they're probably going to be reducing those positions at some time in the near future. But what I want to point out is that you will notice that the rise in price, particularly from the end of October to the end of November, here, November 22nd, the 1st of November, the end of October, the 1st of November, my mistake. Once it turned up, large speculators turned net long. Curious, but unusual. Anyway, we expect this to continue for the following reasons. There's a pesticide ban in Europe, and so Europe's output has been affected by drought and uncertainty. Meanwhile, in India, mills diverted more cane to make ethanol, partly in response to rising fuel prices. The Indian Sugar Mills Association has cut its shipment outlook to about 6 million tons for the season due to bad weather. So this shortage of supply is raising prices. The latest projection showed that the world's second largest sugar exporter is likely to produce 34 million tons of the sweetener in 22-23, down 7% from the previous forecast. Now, on the other side of the supply picture, Brazil, who was a top exporter, was set to collect one of its best ever crops. Now, here's the key for our trade, with harvesting starting only in April. So, we see the upside of this. We take this out further. We see the upside of this going on for quite some time. I will give you the maximal chart to give you a full data set perspective on this. But if we take a 1 week chart ought to do it. You see where we're at. Sugar's got a long way to go. Sugar at its peak in, when was this? November 2010, reached 24 cents a pound. And here we're talking of sugar at 21 cents a pound. So there's a long way to go. We think it's going to continue. Volume is increasing as the price rises, always a good indicator of continued trend growth. So we're net long today on sugar, ladies and gentlemen, and the palladium trade that we entered into this week is also holding on and doing very nicely. So I hope you entered that, and if not, do a little homework. Take a look at what's going on in palladium. That's going to do it for today, ladies and gentlemen. Sugar up. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Khalas for now.